We invest in investments that operate primarily in emerging and frontier markets, but legally we
Okay.
can invest really in anything, anywhere. I know that
Oh,
sounds crazy broad, but
Artlist
generally
IO.
speaking, I like to look at mostly equities or mostly investing in actual businesses with a
okay.
longer term view.
Mm,
Sometimes we'll have shorter term views, but generally speaking, just I'd say maybe as a student of history, I like
mm-hmm.
to judge a longer term, where
Music
is something going to
licensing
go over the
reimagined.
very long term? And then is there something about this that people don't really understand right now? So sometimes this could be in a very small country that no one really looks at. At one point, we had a goodly amount of money in Mauritius, if you can imagine it. It's a
Wow.
million people island in the Indian Ocean. We don't have any investments there now, but things that maybe the bulk of the investment public aren't looking at any given point, or don't necessarily
Artlist
understand,
IO.
Mm-hmm.
and sometimes owning it longer than just, I don't know, what typical investors do.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property
Artlist.io.
power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through real estate, business, and investment. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
Before we dive into the conversation, I want to let you know that this episode is a paid partnership with BetterHelp. You know what's interesting? We all have these patterns in our lives. The ways we react when we are stressed out, hurt, or disappointed. Maybe shutting people out or walking yourself into exhaustion. Or that voice in your head that says you're not good enough. For me, it's shutting people out. And here is the thing. We know that these patterns aren't helping us. We can see them clearly, but breaking them, that's a completely different story. I used to think I could just power through on my own, that time will heal everything, or I just needed to be stronger. But the truth is, some cycles are nearly impossible to break on your own. Not because you're weak, but because you're so close to see the full picture. That's why having outside support, real professional support, becomes a game changer. When you have someone who is trained to help you understand why these patterns exist and give you actual tools to help change them, everything shifts. You're not just surviving anymore, you're actually on your path to healing. That's why I'm partnering with BetterHelp today. BetterHelp is on a mission to make starting therapy easier. They will connect you with a credentialed therapist who was trained to listen to you and give you helpful, unbiased advice, ensuring confidentiality throughout the process. You just get to fill out a questionnaire and you'll be matched with a therapist as soon as possible. And if that's not the right fit, don't fret. You can easily switch therapists at any time at no extra cost. To get started, head on to betterhelp.com/bricks and banks. That is betterhelp.com/bricks and banks to get 10% off your very first month of therapy. I'll make sure to leave a link in the description so you can get right on. Breaking the cycle starts with one step, and this could be yours. Going to therapy is not a sign of weakness. It's a sign of strength. BetterHelp makes therapy simple with 10% off your first month of therapy to help you get started. So what are you waiting for? Remember, you don't have to do this alone. A problem shared is a problem half solved. And we are live. Hey everyone, welcome to another amazing episode of the Breaks and Banks podcast. On today's episode, I have a global guest. My guest, Ryan Floyd, is a CFA chartered holder. This is something I wanted to do but I couldn't get. So I'm glad I have a charter holder in the house. Yet I think you're the first charter holder in the house. Amazing to have you, right, Ryan?
Most of us are huge nerds, and so that's probably why everyone is under a rock.
Okay, so Ryan is not a typical investor. He's built a career from Mumbai to Boston, turning overlooked markets into opportunities. and proving that sometimes a three-person firm can outthink the giant investment firms. We'll talk about patience, history, and why culture matters just as much as numbers.
Great.
So when it comes to investing, and if you've ever wondered what it takes to spot value, this conversation is one you wouldn't want to miss. So welcome, Ryan, to the show today.
Great. Thanks for having me.
Yeah, Ryan, you're the founder and the portfolio manager at Barker Capital.
That's
So
right.
has that always been the end goal for you, the end game, to go out there and start your own
It's a good
investing
question.
firm?
I had a great aunt that used to say when I was a kid,
Yeah.
something like, you should think about starting your own business or something like this. I just remember her telling me as a child that she hadn't started her own business, but her husband was a plumber, and she didn't really say anything about money or freedom, but I think it was something about freedom and determining your own destiny. I had a little lawn mowing landscaping business as a
Oh,
kid, and I liked that a lot. I did it in my neighborhood. I bought my own leaf blower and mowed lawns in the hot summer. And I had a little business stringing lacrosse sticks, if you can believe it.
wow.
And I liked this a lot. And I would say I I liked doing my own thing, but I was also a team player, and I didn't always want to start an investment fund, but it was I think one thing led to another, and I really enjoy doing it. It's been really great and fantastic. I think doing my own thing was always something that I enjoyed doing. So
Yeah.
I mowed lawns in our neighborhood. I shoveled the snow and took care of the leaves, and I had a little trimmer. I used to buy the gasoline for it. And I had a little business stringing lacrosse sticks, which was a pretty good business. This was in middle and high school. And I like doing my own thing, even in jobs when I was working in India or working at Auerbach Grace, and I enjoyed, let's say, being entrepreneurial even when I wasn't running my own business. So this sort of strain has existed with me for a long time, and it's been a lot of fun running Barker Capital for so many years.
Nice. So did you have like a mentor, someone to show you the rudiments of gardening, like mowing lawns, or it's just something you figured out?
It's a
You
good
like a
question.
boat
I did
camel,
it.
summer boat
Well,
camel.
my sister and my dad and I, and my mom too, mowed our own lawn. I grew up in a suburb of Baltimore, Maryland, and so I would do it, but we all did it. I mean, we all kind of pitched in and would do the lawnmower. And then I don't know, at some point, I think my parents sort of suggested you should try to do this for your neighbors. And that was a good idea. And it wasn't that difficult. I mean, this was not a very challenging.
Rocket
You had to
science.
do it. I mean, I had to show up and do it and collect the money and I don't know, be there when it snowed and all of those things. It seemed like not that difficult when I was doing it, but now I would say kids don't really do this kind of thing that often
Exactly.
now. I don't really know why. It's like I've heard they're all just studying for the SATs, but you can't study for SATs like 20 hours a day in the summer. I don't really get it. So, but this was a good way to get some spending money, and I don't know. I had some idea in interviews later in life that having this lawn mowing business would somehow be good. I didn't put it on my resume, but that somehow someone would care about it. No one ever cared about it. This is the first question I've had about this, let's say maybe in 10 or 20 years.
Nice. I would want to talk about your life in India and what it was like
Sure.
in Mumbai. But before we dive into that bit, I titled today's episode The Patience Premium Global Investing with Ryan
That's
Floyd.
nice. I
Because
appreciate that.
we tend to say that investment is a long game, but some other people have different opinions. But you're going to teach us the art of the patience premium when it comes to investing today. So let us talk about your time at Yale. You studied history in Yale and also playing lacrosse at high level. So looking back, how did balancing academics and sports shape your discipline and the way you approach challenges now as an investor?
Thanks for the question. Playing lacrosse in college was a big commitment. It's funny, a lot of parents seem to want their kids to do it. I would sort of say you would only really want to do this if you were really obsessed with the sport, which I was. I was obsessed with lacrosse and I still like it a lot, but it was a huge commitment. I think it took, in season, it was probably 50 hours a week, and the off season was
wow.
probably 20, 25 hours a week. I mean, we were taking buses all over the country and we're getting up at 6 a.m., 6:30 a.m. for sprints and weightlifting. It was a big commitment, but I loved it. There were certain seminars I couldn't take as a result. I think practice started at 4:30 or so. So in season, we couldn't really take anything after 2 p.m. And I guess in theory that was kind of sad, but in reality, I didn't really think any other way. There was kind of no world where I didn't want to play college lacrosse just because I enjoyed it so much. So it focused my time,
Yeah.
or I was forced to focus my time where I could. And in hindsight, I think I got a great education and I took wonderful classes. And if I missed this or that one that was in the afternoon, I don't think that's a problem. It was kind of like a commitment mechanism. When you have no choice, when you have wider margins, then you're forced to do what you have to do. But yeah, we were studying on the bus and we had a lot of fun, and it was a lot, it was great. It was great playing lacrosse at a high level. I wasn't an All-American or anything like that, but I played offense, I played attack, and it was a great time in my life. I liked it a lot. And studies were kind of a parallel world, basically.
Were you part of the national team in Yale?
Good question. No, we were okay. I think we were
Okay.
like top quartile of Division One teams, but we never made it to the playoffs. I played with some excellent players and really wonderful teammates.
Nice.
I will say when they won the championship a decade later,
Yeah.
it was like the best day of my life, even though I wasn't even playing. If there are any of the players listening, which I doubt there are, but if there are any of the players listening, I mean, it was tremendous seeing your alma mater win a championship. I can't even imagine what it's like to be at one of the schools that wins a lot. But that was just a huge delight. We didn't really expect it to happen as fans, at least from afar, but that was an amazing team. It was lovely to watch and be a part of it from afar. I think my wife and I had like a little baby or babies at the time. We took them and
Well, how competitive was it though? Because Yale is like the Ivy League school, is
sure.
over there competing with the likes of Harvard and Stanford. How was it in
How
terms of,
competitive was
yes,
it? It felt very,
competition?
very competitive. I mean,
Especially you
we,
studying a
even though we
creative
weren't
course
even
like
the
history.
top 10, I mean, we were the top quartile
Yeah.
or so, but we took it very seriously. We were lifting a lot of weights. Uh, I worked really, really hard. I was throwing the ball against the wall. I tried to work on in lacrosse, you get a benefit playing with your offhand. It's not
Okay.
like in ice hockey where it's just backhanded. It's the Canadian players play like that, but it really helps if you can go right-handed and left-handed.
Mm.
So I tried to get good that way. I had a lot of injuries though. I mean,
Oh.
unfortunately, in hindsight, I think I didn't really give myself enough downtime. It was like the motor was always running and I was always thinking about could I do something else? And I broke my finger a bunch of times, separated a
Oh,
shoulder and sprained
sorry
ankle,
about that.
broken ankle, that kind of thing. I mean, it's life. It kind of comes with the territory.
Yeah.
But we took it very seriously, and that was a good time. I think what you're hinting at is, did it set the tone for something else later in life? And
Yeah, in
I
terms
think
of
it
how you
helped
do
raise the
business.
game, right, of like
Okay.
what hard work really looks like and what
Mhm.
physical exhaustion really looks like. And
Mhm.
it gave me some sense of just what I thought I could do. I had some I think a lot of men maybe think that uh, the world really cares how hard you practice or something. In reality, no one ever cared. I mean, this is one of
Yeah,
the few times
just
people have really
just
asked.
win it. Just
Yeah,
make
they
sure you
kind of
win.
want to know, like, can you make a discounted cash flow model or can you analyze a company or whatever, which is fine. But I think that
Mm.
the fun thing for me is just knowing with a separated shoulder and a broken finger, I could compete against very, very good athletes and do
Mm.
okay. And thing to tap into when life is difficult
Yeah.
and things aren't going your way. You can say, "Hey, I've been there before. I've done challenging things, and I can handle this." That's nice.
Yeah, that's really good. And so after college, you made the bold move to Mumbai to work with Mahindra and Mahindra. Why Mumbai at the time? What was the thing about India that was calling you to the big city?
It's hard to imagine this now in 2025, but in
Yeah.
2020, in 2002, when I made the decision, um, a lot of my peers, there was a great international spirit at Yale, and a lot of my friends were studying Chinese or Arabic or Spanish. People were making plans to live in this or that country. And believe it or not, for a country of 1 billion people, not many people were talking about India. And I wanted an adventure and I wanted to do something different. And I just thought, in my lifetime,
Yeah.
this country will matter more and more. And it doesn't seem that well understood by the United States. You could probably make the same argument now. And what an adventure to try to go and get a paid job in the country's financial center, which
Wow.
sounds crazy now. I mean, it was crazy then. It's almost crazier now. But I was the first foreigner ever hired in their home office.
Oh, really?
And I had no, I mean, I worked with, I mean, this sounds obvious, but I wasn't hired like an expat fancy guy. I was hired like any 22, 23-year-old. And that was great. I took the bus home from work. I was reading my book and kind of hanging on to the ropes that came down from the railing of the bus. I have great memories of that time. It was
That's
like 10 years built into a year and a half or 2 years.
wow. So was it like an internship program or what exactly?
It wasn't an internship program. I had pitched
Okay.
the idea to their senior management. I mean, this sounds crazy in hindsight.
Okay.
Like, hire me and I could do this or this or this for you. I'll probably do it for 2 years or so,
Mm.
and then we'll see what happens after that. And so it wasn't an internship. It was like a real job. I got the
Okay.
equivalent of like Social Security, I paid wages into the pension system and had to get them out when I left. I paid normal taxes. I had an apartment with a landlord,
Wow.
and I was like a normal employee. I had great friends and colleagues. We built a fresh fruit and vegetable export business inside of this big holding company,
Oh,
which was really great. I mean, great experience for a young person.
nice. So when I think of Mumbai, what it brings back memories from Lagos. I'm Nigerian, so I started my first work experience in Lagos, and I know how crazy the city life can be. Lots of traffic because there are lots of people. It's the most populated city in
Yes.
Africa. So same thing in Mumbai is the most populous city in India and is a financial district. So what was it like living in India, commuting, your day-to-day city life and working with the farmers and exporters at that time? What was it like for you?
Gosh, brings back really fantastic memories. To give you some perspective, when I moved to New York City after living in Mumbai, and I told
Yeah.
someone that living in Manhattan in comparison was like moving from Manhattan to North Dakota, which is like the least populous part of the United States. So it was like Manhattan times 20 in terms of population density
Hmm.
and energy. And I really liked the time there. I liked that people really took pride in the work that they were doing. People were all trying to do something. There were a lot of people who owned small businesses, and I appreciated that. You've been to Lagos, I've been to Lagos. It has a similar spirit to Lagos, Nigeria. So I lived in a big apartment complex. I think it was several thousand people. It was maybe two-thirds of the way up the peninsula. I didn't commute by train. It was just like a little too packed for me, but I pitched into a carpool with a friend in the apartment complex, and we listened to Hindi radio on the way to work. Sometimes I read my book, actually. And then on the way home, I would take various buses.
Hmm.
There was one bus route where it would go all the way, but that rarely came. And so then there was another bus route I was living in Gotkoper at the time, if anybody knows it, Gotkoper West. And there was another bus route that stopped in a place called Dadar, and then there was another place that stopped, I believe, in Chambor, and I had to switch. And there was always this gamesmanship of whether I would have to wait another 30 minutes when I was switching buses, or whether there would be another one. I got sort of pushy though to get into line. I remember when I came back to the United States, I was waiting for a bus stop and I slammed myself into the front of the line. And someone looked at me like, that's not the way we do this here. I was sort of used to like 100 people trying to get onto a bus with 40 spaces. There were good lessons in that and sort of cultural also for that process. What was also nice is there were a lot of protected holidays. So I traveled quite a bit for work. I think I went to 20 to 40 cities, and it was just a wonderful experience because of the different languages and religions and communities all over the country. It was a delight trying the local. I mean, the food is quite different. The desserts are quite different. That was a blast, even on a very, very modest budget.
Nice. But I want to understand your story. You studied history in school, but you went on to become a CFA charter holder. How did that intersection come from history to finance? How did you get there?
It's a good question. It's kind of one thing in front of the other. I thought in undergrad, I didn't really want to study something explicitly pre-professional in actual my
Okay.
actual classes. The United States does it a little different, where if you want, you can kind of read these great books. And
Mm-hmm.
I I kind of thought, look, I'm not going to have time in life, which is not totally true, but I'm not necessarily going to have time to read these very thick, dense works when I
Yeah.
finish college. But if I read them in college, they could provide a kind of foundation for the way to think about the world
Mm.
that I could take with me. But I knew that if I just showed up in an interview saying, hey, I know about Plato and Aristotle, no one really cares about that. So I tried to have real jobs in the summer and
Okay.
would try to be quite I don't know if aggressive is the word, but I worked really hard to get decent internships in the summer. So
Oh.
I worked for UBS one summer, I worked for a think
Mm.
tank one summer, I worked for a corporate law firm another summer. So
Okay.
I had these little bits of experience even as a late teenager.
Mm.
And I thought basically I could kind of get sort of the job that I wanted just by energy. I remember sitting down with someone at Yale Career Services saying, I want a paid job in India after college. What are the chances? And they said, it's like not very good. And I said, like, how bad? They said, I don't know. I've never heard of anyone doing this. It's less than 1%. And I said, oh, well, that's not too bad. 1% is like a 1 in 100 chance. So if I reach out to 1,000 people, my chances get pretty good. And that's basically what I did. So that was kind of how I approached undergrad, but I knew that I didn't really want to. This was kind of like a foundation for the rest of my life. I
Okay.
liked business in India, and I met a handful of people that said, look, if you like doing this, you'd like the world of international finance. Frankly, I didn't really know that much about it, other than just reading The Economist. And I ended up getting a job with a brokerage firm called Auerbach Grayson that I really loved. And I enjoyed that job because I could interview all of these hedge fund managers while I was recommending investments to them. And it just seemed like, hey, wow, I could get the CFA while I was on the job. That I didn't have to stop and get the MBA. I just thought the opportunity cost of stopping my job would be too high. So
Yeah.
it was, I don't know, life has a funny way where you're hosting a podcast. I'm sure you didn't imagine that 10 years ago.
Never.
Like one thing after another, and you say, oh, wow, this is interesting. Maybe we should look at that. And suddenly time goes by and it's a different path, but that's okay.
That's really good. Did you have so were you essentially your colleagues at the investment banks where you did the summer internships that basically put you up to it that I mean you should start a CFA, you're already in the system.
It's a good question. Not really. I didn't do any of the investment banking internships. I worked for a gentleman who did private wealth management or
Oh,
he managed money for institutions.
okay.
So
I see.
that was in Baltimore. It wasn't in New York City.
Okay.
I have this instinct where when everyone seems to be doing something, I don't really like doing it,
Hmm.
which is probably not the greatest thing if you're a parent. I mean, I don't know. Bless my parents for being so flexible. So many people in college wanted to go into investment banking. And so
Hmm.
this was the late 90s, early 2000s .com sort of era. It just made me kind of nervous. So I never I never went down that path. When I was 24 and got the job with Auerbach Grayson, though, no one really said you should get the CFA, but I just kind of looked around and said I had no formal finance background. I'm going to have to
Yeah.
teach myself these things. So I read a whole bunch of books and then I think looked at the program and asked a couple people, if my memory serves right, who had the CFA charter holder, and they said, yeah, it's a good program. For listeners that don't know it, what's interesting about the program is something only like 10% of the people that begin actually get the designation. So
Yeah.
if you have it, it's kind of a big deal
It's a big deal.
because it takes a lot of time. It takes like 800 hours of studying or something like that in order
And
to
so
pass
much
it.
money.
Maybe a little less. Yeah, it costs money and time and all that good stuff. So I'm glad that I did that. It's helped. I guess it makes me a little sad they say AI can now pass the test, but
Oh,
I
really?
think human beings, I think if you're hiring someone it's better to hire someone that knows stuff than doesn't know anything, whether or not AI can do the work.
That's nice. So talking about the 2000 in the financial world where everything was crumbling at the
Sure.
time, you decided to launch Barker Capital. What was going through your mind, and what gave you the conviction to start when every other person was pulling back?
Gosh, it's a good question. I thought there are good, I thought then as now. I mean, I'll set it out for you, but basically I had a lot of discussions with some of the world's biggest asset managers
Hmm.
in the United States. And the conversation would typically go something like, I just went to Dhaka, Bangladesh, or Karachi, Pakistan, or something like this. Believe it or not, they have stock exchanges and there's some interesting investments there. You should check it out or something. And some people did and were and appreciated the ideas. Other people said, that's really interesting, but our partners would fire us if I did that, or our documents don't allow us to do it, or we can't find the liquidity we would need, or our custodian doesn't allow us to invest there. So over and over and over, it seemed like if the structure was right, you could have an opportunity if you handled it right. The other thing is that it seemed like a lot of investment funds had overly high fixed costs. Their offices were too fancy, or they had like 100 employees managing $20 million or something crazy.
Hmm.
And it seemed like if you could keep your costs low and be transparent and focused to potential partners about what you're doing, then there are real opportunities. And I didn't really think 2008, now's the time, but I both got kind of lucky and unlucky. Some of our initial investments were horrible.
Hmm.
And then the real lesson was you just have to stay in the game and don't die. And then some of the other investments were, well, let's not say good because I don't want to, I don't know, get in trouble talking about performance. But let's just say if someone buys something during a crisis, it's sometimes the valuations can be pretty good.
Okay.
But a real lesson came that you have to be able to stay in the game, which means not taking on, I don't know, silly leverage or not having your structure in a bad way. Yeah, it was a crazy time to begin and to launch a business, and it's kind of, I don't know, it's sort of wild in hindsight. I have to say for compliance purposes, this is not an offer to buy or sell or marketing information and all of that good stuff.
Nice. So, what is your company trying to solve? Because I understand that most companies are set up, most businesses are set up to fix a problem. So, what solution is your company primed to bring to the marketplace?
It's a good question. I think generally speaking, I'd say particularly for the Americans, but also for most countries, there's tremendous home bias where if
Hmm.
you're sitting in a place, you're biased towards investments in that place. And often there are just structural opportunities that exist because of that very fact. If you look around the whole world, there are lots of different potential investments to make, particularly if you consider that people have biases focused on wherever they are.
Hmm.
It's not really a problem to solve. It's more just saying, wow, the world is a very big place. There's a lot to do. And if we have our eyeball on things that perhaps not as many people look at, or not as many people look at in the right way, that could create potential opportunities.
So, what sort of investments does your company focus on? Because I know you have background in commodities and whatnot when you were in India. So, what sort of
Sure.
investments do you guys manage?
So, how shall I say this? We invest in investments that operate primarily in emerging and frontier markets, but legally we can invest really in anything, anywhere. I know that sounds crazy broad, but generally speaking, I like to look at mostly equities or mostly investing in actual businesses with a
Okay.
longer term view.
Mm.
Sometimes we'll have shorter term views, but generally speaking, just I'd say maybe as a student of history, I
Mm-hmm.
like to judge a longer term, where is something going to go over the very long term? And then is there something about this that people don't really understand right now? So sometimes this could be in a very small country that no one really looks at. At one point, we had a goodly amount of money in Mauritius, if you can imagine it. It's a
Wow.
million people island in the Indian Ocean.
Yeah.
We don't have any investments there now, but things that maybe the bulk of the investment public aren't looking at any given point, or don't necessarily understand.
Mm-hmm.
And sometimes owning it longer than just, I don't know, what typical investors do.
Okay. So, I mean, for people watching right now, people are wondering: is it that easy to start up an investment company? What do you
It's
think are
not
the
easy.
so what are the requirements in terms of
Gosh,
regulatory and capital wise that people should have in place before they say, okay, I'm set out to start an investment company?
it's a good question. It's not an easy thing to do. I would say, in
Mm,
terms of personality, there are always ups and downs. There are always
yeah.
things going good and bad. I really like the research from the consulting company Analytics, which
Okay.
basically shows that even the very, very best fund managers can only provide alpha on some, can only have outperformance, or let's say a good trade
Mm,
60% of the time. So it's not quite as bad as baseball, but it is
okay.
that even the best fund managers are wrong a lot.
Mm,
And it's not the easiest thing to get used to that, but you have to get used to it. You have to get used to going wrong or things just really going against you. And that is not the easiest thing of all time. In order to set up a fund, gosh, I don't know if I would have the best advice, but
I mean,
generally
you were
speak,
able to
you
do
know,
it in a downturn market, so
I know, I know.
really,
I mean,
we're going to look
what
at you
I
for
often
advice.
tell people is a lot
Yeah.
of fund managers try to be everything to everyone. And what it ends up
Mm,
meaning is they kind of move like a Ouija board around the world. And then when times are bad, their partners don't really know what they're doing. And that's not so good. Like, in my experience, it's much easier for someone to really know what they're about and know exactly what they're doing rather than just saying, hey, I'm a smart guy. I'm going to invest with interactive brokers or something, which is very, very challenging. Yeah, it's kind of wild. I was looking at the years. I've almost been doing this 18 years,
wow.
which is like 100 years in asset management land. But it certainly helps to have partners that understand you. This sounds really dumb and it's very obvious,
Mm.
but it's important that the partners really know what's going on because
Yeah.
often that's not the case. I think a lot of LPs in lots of other funds are not totally clear what they're getting themselves into. And then when the inevitable something something happens,
Mm.
people are quite surprised and maybe they weren't prepped appropriately. It always makes me nervous when there's a pitch deck or something that's promising the world and it just looks incredible and
Yeah.
they're not really hedging this or that thing and saying, gosh, this is risky,
Mm.
or you should be aware of this and this and this. Not as a disclaimer, but in reality, that always makes me nervous. And there have been times in my career where I've seen that. You see kind of a flood of capital into a market. In theory, that's good, but it has made me a little nervous in some areas. I've always had the kind of perspective like Dos Equis, like I don't always drink beer, but when I do, that kind of thing. It's like you don't really have to do
Mm.
this or that, but if you do know what you're doing, I know that sounds obvious, but it actually is not as obvious. I don't
So
know. It
So,
doesn't really work that way a lot.
so are you saying that people should start off with like two or three asset classes when it comes to investments before like pushing it
Gosh, I
further?
don't know. I mean, if someone has a very specific question for me, I'd be happy. They can send me a message on LinkedIn with Ryan
Definitely.
Floyd, but I don't know if I have standard advice. I think I have more standard advice of what not to do. Like,
Mm-hmm.
don't take excess leverage. Don't
Mm.
have misaligned liquidity. A lot of folks have like daily liquidity and then they're buying things they can't that are not is not daily liquidity. So don't invest in things where I don't know there are a bazillion competitors doing this. I think
Mm.
there's almost more hedge funds than there are American stocks. It's
Yeah,
much easier if you're investing in an area where there just aren't as many eyeballs looking.
very true. So, what was your strategy like in terms of team building? Because, I mean, starting an investment company at the time where the market was falling, you would need like God and some angels to basically convince people to join you on that crazy mission. But what was your strategy in picking the right team and working with them to bring your vision into life? Because it's one thing to have a vision of what you want to do, is another thing to execute it, and you can only execute it successfully with the right team.
Sure. Gosh, it's a good question. I like what you said. You said a crazy mission, right? You have to
Yeah.
pitch someone on a crazy mission. So I've always been game for crazy missions. I mean, I had to as a sixth grader, I was convincing my friends to pay me to string their lacrosse sticks. I mean, I did for a lot of them. I feel bad if any of them are watching this because in hindsight, now knowing how good guys are at this, I was really not nearly as good as I should have been for people to be paying me. So I've always been game for the crazy mission, crazy in the sense of dreaming big,
Hmm.
not crazy like stupid. So I always thought that if you did a lot of homework and then brought a lot of energy to something, particularly with a good team
Hmm.
or a good network, then that was worth time and energy. I developed a pretty good network when I was in when I was in New York.
Okay.
And so when I started Barca, I was by myself as a portfolio manager and I outsourced all kinds of things. So
Well.
we outsourced a lot of the core functions
Okay.
instead of having the extra employees because I wanted to keep the costs low so we could survive a nuclear meltdown, basically. And now we have a team of three. And I
Wow.
think the
Just three
lesson
people.
is, yeah, we call it like a small and mighty team where we cover many different things with a lot of energy and gusto, but also it means that if there's some risky downdraft or something, we're not in trouble or firing anyone, whereas maybe our
Hmm.
peers are having like an existential crisis. And maybe not our peers, but typical funds
But
might
in the
have an
same
existential
industry.
crisis. So I've always thought it's helpful to have a good network. And what I mean by that is just it's always nice to have conversations like this, honestly, with smart and interesting people that are doing interesting things.
Yeah.
And that has been the case since I was an adolescent, basically. And it's served me well. Like, I was on the debating team in high school, and I used to write these cold emails to professors focusing on this or that thing. And they would write me back, 15, 16-year-old. And the lesson was there, like, why not? Why not reach out to smart and interesting people doing good stuff? You never know where it's going to lead.
Yeah.
This doesn't really answer. I mean, this is a long answer to your question, but
I mean,
I think the other thing that was important is just taking time to hire well. A lot of people hire very quickly,
hmm.
and I like the book Top Grading and the book Work Rules by the ex-head of Google's HR, which makes the recommendation of taking your time to hire very well and not just like a knee-jerk, we need to fill this gap. We just do it. And then suddenly a year and a half in, you realize it's not a good fit. So that just hasn't been my style in life that to date has served us well.
Yeah, like how you put it, hire slow, fire quick. And you have a very lean team, meaning that you're able to leverage on your competitive advantage as a team and outsource the bulk of the work to the other companies. So at the end of the day, you're not competing, you're collaborating with these other companies in
Mm,
the industry.
Sure. Just to
Yeah,
clarify though,
that's
we
smart.
do all of our investment analysis in-house. So I'm not outsourcing any idea generation, or
Oh,
I'm
I
not
see.
outsourcing any investment decisions. I think early on we outsourced, say, we had an outsourced accountant, for example. So
Okay.
we could just have a third party accountant
Mm,
handle the books, and then it worked very well. Or like outsourcing tax advisory rather than having, we had in the very beginning, we had zero tax expertise. Now more of that is in-house, but the core secret sauce has always been in-house.
okay.
I've never had the style of like having the so-called network giving
Okay.
um, the core process. I think you can kind of get into a dangerous place that way. That's my
Mm,
experience, at least.
yeah, that makes a lot of sense. So let's talk about the core theme of this theme of this episode. Patience premium is something you often talk about. Patience premium. So this is the idea that global investing rewards people who think in decades rather than in quarters. So what does that mean to you? What does patience premium mean? And how do you personally stay patient in an industry that constantly push for speed and short-term results?
Oh, these are great questions. This is like a 2-hour conversation, but I'll try to keep it brief. I mean, these are really good questions. How do I stay patient when the world is
It's
encouraging
going
you
fast.
to day trade and have clients that day trade?
Yeah.
I think to some extent that's like a personality. So I've been married for a very long time, and we met a long time ago, and
Uh,
I don't know, it's maybe like a style where I'm just maybe not a day trader type personality. So that helps that I see things as, I just generally speaking see things over a broader landscape. So if this is happening now, it's not because if this event is happening now, it's not because of something that happened yesterday.
yeah.
It's often because of things that have been happening over a very, very long period of time. In some cases, centuries, or, a very long time.
Mm,
And that kind of perspective helps put things into perspective. So, but I mean, that's a stupid thing to say. That kind of perspective helps make me less worried when there are worrisome headlines. So, a simple thing like this or this country, central bank doing this and this silly thing. Well,
mm,
there aren't that many countries that have a perfect relationship with the central bank. It's never perfect when it happens, but you can say, I don't know, they actually have a long history of these kind of things messing
mm,
around with the central bank. So the question is, how bad is this? Is it in line with what we've seen through history, or is this new and worrisome? And I think the other thing, patience premium, is maybe something like you need to have a higher, this is nerding out a little bit more, but you need to have a higher discount rate in riskier places. That just means that $1,000 or $100 earned in 5 years in a riskier place is worth less today than it is in a less risky place. And this is obvious, but often people forget that when some country is going through some mania and everyone loves it. So there are things that happen, there are events that happen that change
okay.
what is I'm sorry, I'm not articulating it that well, but there are events that happen that make me say this is actually fundamentally new. I don't care what the longer term trend is. This is fundamentally new and it's bad, and we don't want to operate there. And you have to pay attention when that happens.
Mm,
But the important thing is just knowing whether some headline is really a sign of some fundamental issue or just the way it works. For example, some countries have a livelier press than others, and some countries are more violent than others. Question in reading these headlines is this really new, or is this just kind of the nature of this country that it happens to have
I
more
see.
violence than others? I mean, Cormac McCarthy has a lot of books about the violence of the American West, for example. So if you read that, you might think, oh my gosh, this is some new era. It's really terrible and violent. Violence is certainly horrible and terrible. I think from my question, it would be, does the world think this is all going to lead to some utopia, or maybe is the world like overly depressed that this level of instability is going to lead to a complete breakdown of all civilization and
Mm,
I don't know, making some sense of what's happening in between.
okay. Okay, that makes sense. So, but how do you manage your clients if your client wants a very quick return and your company's vision is to apply the patient's premium? How do you manage the expectations in such circumstances?
It's a good question. I think I mentioned it before. It's really
Mm,
important that investors in all stripes know what they're doing or know what they're getting into.
okay.
So at least for us, for me, it's very
Yeah.
important that I have conversations with people so they know what I do, that I know what kind of investments that we do. So we're not doing it here, but in a normal conversation, we would talk about very, very specific things around specific investments. So people know that, and no one is surprised when something is less than perfect. And those are difficult conversations to have,
Yeah.
but they're good and they're very important. And they, I think, prevent maybe something like a bubble or like over enthusiasm when things are good, but
Mm,
then also when things are not good, you know, you don't have people jumping out of windows or something like that.
okay.
And I think that's just kind of good, good style of communication.
Okay, that makes sense. So, well, how would you advise a first-time investor on building their portfolio? What are the top three asset class you think they should have in the
It's a good question. I think I probably rather not. I don't know. I'm just a normal guy doing my own portfolio. I
you're
don't
not
know if I
normal
could
at
be in the
all.
business.
You're a
I
CFA
think
chapter
my
holder. We're
my
going to move you.
advice would be just something that like they recommend in the CFA, which is to
Okay.
have some money on the side for a rainy day that's reasonably liquid.
Mm-hmm.
And then just like the CFA recommends for money you don't need for 5 or 7 or 8 years, you could invest that in things that are more volatile like equities and things that you need in the middle, maybe something that's less volatile. I think
Mm,
beyond that, I don't know if my recommendations would be anything special or particular. I think what I have seen is less like what to do and more things what not to do. I've been quite surprised that single country ETFs, for example,
mm,
broadly outside the United States, have all kinds of strange things in them, like severely regulated government companies that are not operating in the interests of shareholders. So a country might say, you might say, well, this country really seems to be changing and it's moving in the right direction, but that doesn't always mean that the stocks that are in the ETF are the absolute best things that you would want to own. So it's not so easy. I think I had some friends say, could I just read The Economist and maybe buy the ETFs of the countries
mm.
that I like or don't like? And I would not really recommend that. So I think generally if I'm giving personal advice, it would be not to do crazy speculative things. I know that sounds obvious, but I would say keep it simple.
Okay. Keep it simple. Like, do you advocate for real estate investment trusts, or people should just do? People should
And
just stick to
I don't
safe
want to
ETF.
I don't really want to give investment advice. I think that there are a lot of books out there
Mm,
on personal finance that you could just kind of Google top 5 books on personal finance to keep it simple. I think beyond that, I don't I don't think I necessarily have any golden gems that look,
yeah.
I'm wrong a lot, like all fund managers, right?
Mm,
So following the advice of even the very, very best fund manager means you're going to be wrong a lot, and
yeah.
it's very dicey if you're trying to copy something or even following that fund manager's advice. It's kind of funny. I look at other fund managers' portfolios and I always kind of wonder which ones of these are the 40 to 50% that are not going to do so well.
Okay, that makes sense. And I know when it comes to doing your analysis before you take an investment decision, you do a lot of studies. So how do you think your study in history has given you an edge in this investments spectrum?
I do think so. I think
Okay.
it's not just about investments, but I think a historical perspective
Hmm.
particularly in the United States, but I think elsewhere too, a historical perspective is really helpful. So
Okay.
it just puts what's going on now into broader themes, and it makes me less reactive or less worried when something happens because it puts current events into a broader context. And
Mm,
so I kind of think that greater historical awareness is probably good for the world. Now, people have kind of told me, well, history is biased and the authors are biased, and how do you trust them? And that's true. And so it's just helpful instead to read multiple books on the same subject. So typically, when, not every time, but usually when I invest in a new country, I try to read multiple books about the place. And by now, having done this over 18 years, it's like lots and lots of books and history books about lots of different countries. So when some weird thing happens, which does all the time, it puts it into greater context. And I do think that's an advantage. I don't know if it's an advantage in terms of making any money
yeah.
or being a better fund manager. I don't know if it necessarily provides some premium or something, but I think it certainly helps. I mean, to bring it back, it helps to be process and be patient. And I think it helps. I don't know what I would say, but something like it provides a kind of mellowing, makes the mind slightly more calm rather than worried, and reactive. And that can't be bad, right? That can't be
Yeah.
bad in a job that has a lot of volatility and uncertainty and worries.
So thank you. Thank you very much for that. And thank you for bringing that up because knowing that investment is a long game, how much time do you think an investor should leave before checking on their investments or maybe changing asset classes? Because sometimes when people like to leave the investment to ride for like 3 months, 6 months. So what would you think is the reasonable time frame, or does it vary based on the asset class?
It certainly varies. This
Okay.
is not professional advice or investment advice, but I will say that it's very interesting. There are many studies saying that individuals rarely achieve the return of their underlying markets because, or
Mm,
even the return of their underlying investments because often they're selling at the wrong time. So when there's bad news and your portfolio is down a huge amount of money, it's
yeah.
very tempting to liquidate it. I mean, there's so many stories of people liquidating during COVID or liquidating during 2008. Now, I'm not a momentum trader. I'm not giving any advice on what to do or not to do, but the academic research does suggest that people are really bad traders generally.
Mm,
And sorry, that's not what the literature says. The literature says that people generally don't achieve the returns that they would get if they just invested for a longer term because they're not trading at the right times. So if that is right, it would suggest that we're probably better off not looking at our retirement account every day, right? If you're looking at your retirement every day, you're tempted to trade and day trade it or something like that.
mm.
I'm not so sure that's a great idea.
Yeah, but there are some people that make money off day trading and they say, oh, that's like a smart thing to do. So I think it depends on strategy at this point because there are different strategies. Some people like, oh, this is the winning one. Others like,
It's
oh,
right. To each his
yeah.
own. I've heard someone say there are many investment paths to heaven, which I don't love that phrase, but I think it is kind of right. So again, I don't want to give investment advice necessarily.
Hmm.
If if people can figure something else out, that's on them really.
That's on them. Or they can come to Barker Capital for proper investment advice, for proper consulting. So for listeners, I know we talked about like if people wanted to start their own investment firm and you were heavy on the things they should not do. So let's talk about the so
You're right.
people
You're right.
for listeners who dream of starting their own investment firms or doing business abroad, what do you see as the non-negotiables? Whether it's picking the right partners, developing patience, or building trust across cultures. What would you say like top three non-negotiables they have to take cognizance of starting their
I
own
do.
companies?
The reason I'm saying what not to do, there's this old idea from the Middle Ages that something
Yeah,
like we don't really know what God is, but we know what God is not.
exactly.
It's like not about stealing and punching and murdering and I don't know, whatever. It's
Hmm.
called via negativa, and it's actually a pretty decent way to make decisions about lots of things, where
Okay.
you would just say, what should I really not do? And if I don't do those, well, that puts me in a better point of success. And I don't think that's the worst. So I could give you some of the things that are hugely annoying of companies that we look at that I would
Okay.
say a company should avoid. So one thing that's really bad is a lot of related party transactions. So this is like
Mm,
the person is running the business, but then has a private business that's outside of the listed public entity, and they're
okay.
doing lots of deals back and forth, and you don't really know what the economics of the deals are. So, limiting related party transactions for things that are not visible would be an absolute must. I think
Okay.
that being a clear communicator is really good. So a lot of companies will look at really don't write a letter to shareholders, which is a shame. Whereas you can sort of say Warren Buffett, on the other hand, writes about successes and failures. So I think if you want to lose, write a horrible letter to shareholders and have a lot of related party transactions. The other would be not to discuss capital allocation. So not discuss what do we do with the free cash flow of the business. A lot of companies don't do that, unfortunately. And I think
Okay.
it more candid discussion of those topics would, really goes a long way, I think. So let's say, what would be the negative? The negative would be not having really bad disclosure. So the positive is just having slightly better disclosure about operations.
Okay.
I don't know if that the related party transaction is substantial because you see this in a lot of places where
Mhm.
there's like a side deal with the person's son-in-law or something like this. There's a consulting
Exactly.
company and some line that's running back and forth between them. That's
Yeah.
not good for anybody, except for the son-in-law, I guess.
Yeah, I understand the related party transaction one because being an ex Big Four accountant, you see these things when you're auditing, and we just spend the rest of the audit's project timeline on such transactions. They are complicated. The more overcomplicated your transactions are, the less it is for you because you're going to be stuck with the auditors trying to explain and re explain, and you just end up paying for it. So,
That sounds right.
yeah,
That sounds absolutely
so
right.
it's not worth it. So looking back on 2 decades, you've spent almost 2 decades in the investment world, and
It's right. I don't even have much gray hair yet. I can't believe it. I think probably the next
I
five
mean
years is just
you're
gonna
having
fall out,
fun.
and
You're having fun,
I
so
am
you
a,
can't.
I am having fun. It's a
Yeah. So what's the single biggest lesson you've learned about people, money, and life so far in your journey?
single biggest lesson.
Yeah.
Gosh, these are good. I don't know. Don't take yourself too seriously. I grew up watching a
Okay.
lot of Monty Python with my dad and my mom and my sister, and
Okay.
I loved the absurd nature of their skits. They were so funny, but also they often flipped life upside down. And they would kind of make fun of the powerful and make fun of blustering personalities and stuff. And I find that's helpful. Like, I don't know. I like silly Halloween costumes and I like being goofy with my kids. And I think it's not good. It can be common in business for people to get puffed up and think that they're really special or something, or long talk people. I guess maybe I'm long talking you, I suppose, but like long talk
No.
people at cocktail parties about how awesome they are. But it's helpful, I think, not taking yourself too seriously or having some humility about how good you are or not good you are, what you can do and not do. I think I think that's helpful. I mean, we're all really
Hmm.
we're all human beings. I don't think anyone is really more special than anybody else.
Nice. Thank you so much for just breaking that down for us. Like it's been a wonderful session. But that brings us to the second part of the segment, which is the firecracker round. So this is me just asking you a bunch of questions and you hitting me
Great.
right back.
Okay, okay.
Are you ready to rumble?
I think so. Yeah.
Okay, when it comes to building relationships, what would you in business? What would you say is your secret sauce?
Building relationships in business. Secret sauce is being interested and asking questions of people. So I think that's like the main
I
issue.
would say your authenticity as well. You're a very authentic person.
Authenticity helps. That
Yeah.
goes a long way also. Being real and not taking yourself too seriously, I guess maybe.
So what would you say is your best and worst investment moment?
Best and worst investment moment. I don't know. I think when Lehman Brothers blew up, I was 26 or 27. I just started this fund,
Okay.
and very smart people were really nervous. And I was sort of naive because I was younger and I hadn't really been around the block. I just thought, "Oh wow, this is going to get interesting. I don't know what's ahead. I'm not going to buy anything tomorrow, but let's buckle up. Things are going to get really real really quickly." I don't know if I don't think that's the worst, but I don't know. That's certainly very, very notable and not necessarily happy. Having said that, stocks then got very, very cheap, which is probably pretty great. The best, I don't know. I've had a lot of good moments. It's really nice to connect with human beings in lots of different countries, many cultures, different. Generally, we talk in English, but sometimes it's nice. I speak some Hindi and Spanish and German, and I would say generally it is very, very rewarding to meet someone that lives in a very different culture and to connect with just a common language of business for shareholders. It's like we want the same thing. We're partners in the journey. That's very rewarding. And there have been many, 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 many examples like this.
Nice.
It's just neat where, and I think we could, it's just a good lesson about going abroad and being kind of humble about who you are and connecting with someone else who's a human being at the other side of the table.
Nice. So talking about cultures, what's your pick? Mumbai street food or Boston seafood?
Oh, definitely Mumbai street food. I mean, the food, I really like fish and chips in Cape Cod and fried haddock in
Yeah.
and Maine lobster. I do like a good Maine lobster too. But
Lobsters are
my
nice.
goodness, I loved Mumbai street food. I never got people talk about having GI issues when they visit India. I never had any of that. So
Uh, yeah.
I liked pav bhaji. I loved the Gujarati mithaiyan or the sweets at those shops. There were a lot in Ghatkopar West. I liked, it's called chaat, which just means snack, but there were like these little kind of noodly snacks
Oh, okay. I need to
and
try those.
samosas.
Yeah, definitely
Yeah, I'm a huge
samosas.
fan. I really, really
I'm a huge
enjoy.
samosa fan. I think India should come and make you their food ambassador because you're spot on in your
It's
street
good
food
stuff.
journey.
Yeah, I mean, I learned how to cook from Indian food, so I would cook dal every night. That was
Nice.
my main food. I got pretty good at it. It was kind of a treat when some of our friends from India came for dinner at our place and said like it's paka, which means like good dal. I was like, all right, I've done it.
Great.
I
Very
think it
well.
means I think it means right. Maybe I got the translation wrong, but I think so. Anyway, it was very nice and very flattering. Like, okay, I can make good dal. That's good.
So if you weren't managing money now, what would you be doing? What else would you be doing?
That's a good question. I mean, if how about this? If I didn't have this job and I didn't have to make any money,
Yeah.
I really like the world of sports and data,
Hmm.
and particularly lacrosse and data. It's really fun as a hobby to think about numbers and how to use numbers, particularly from a probabilistic perspective, to
Yes.
make decisions in sports.
Hmm.
And when you can use numbers from the game to make a team better, I think that's just a lot of fun. And it's a lot of fun in my own game in lacrosse. So it's just like a hobby that I have on the side, and that's a fun hobby. I think otherwise, I don't know. I'm not really sure. I'm enjoying what I'm doing. It is fun. I'm not gonna
Yeah,
lie.
you're having fun. You're living your best life. But
I don't know about that, but it is what it is.
so how do you unwind and reset, like basically blow off
I
steam?
like playing sports with friends. I like
Mm.
Play on this lacrosse sixes team, and we play in some tournaments in the year, and I like that. My body is kind of breaking down, but I mean, it's not really breaking down. I'm just not nearly as strong as I used to be. But I enjoy that a lot. I mean, my kind of hot take is that sports with friends is like the best way to get rid of job worries. It like goes away. I describe it kind of like a coffee press. You like push the stuff to the bottom, and the stuff that rises up is delicious coffee. So that is kind of stuff is a lot of fun.
Okay.
And I mean, I do the things that other people do, playing with kids and all of that business. But like, I think kind of saying that is a cliche. So I don't know. I say other things.
I know our audience have a lot of questions for you. So how can we reach you? I know you mentioned your LinkedIn earlier.
Yeah, I'm Ryan Floyd, like Pink Floyd, if
Yeah.
people still remember that band. And you can find me on LinkedIn. The company's called Barca Capital, Barca Capital, and barcacapital.com is our website. And we have a spot where you could send me a message there if you want. That's
Nice.
probably the best thing.
Cool. I'll make sure I leave the links in the description so
Thanks
everyone
so
can go
much.
there and hit you up. But Ryan, it's been a pleasure hosting you on the
It
pod
was really nice
today.
speaking
I've
with
had
you.
so
Thanks,
much
Stephanie.
time. Thank you so much for being with us today. And there we have it, guys. Let's continue to turn knowledge into action and bricks into banks. I'll make sure to leave the links in the description so we can go and check out Ryan and see
Artlist.io.
So we come your way again next week. This has been Bricks and Banks. Steph, and this is me signing out.